Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on Netflix, ticker NFLX. Now why are we doing analysis on this? Well, quite clearly, if you saw anything trading related today or market related, you would have seen Netflix gap down massively, closed around down around 22%, which obviously for not only a FANG stock but blue chip stock in general is very crazy to see. And now kind of why did this happen? Well, they released their earnings. They weren't terrible earnings, but they did, I can't see where it was now, they added something like 2.5 million compared to estimates of around like 6.8 million. So either way, it was still growth, just not as much as analysts expected, so you did see a sharp sell-off. Now with this, most likely it is an overreaction. 9 times out of 10 when you see this thing, it is an overreaction. But do take some caution with this kind of stock long, for the main reason being, yes, we are long bias on this now, but it may not be one of those instances where we see it kind of bounce back to where it was originally quite quickly. And the reason I say that is the overall market is selling off, so obviously prices are going down. So I could see it kind of struggling to get back to kind of that $500 level until next earnings come out. So that's just one thing to keep in mind, at least that's my view on Netflix. And a lot of stocks now, if they do kind of get down on earnings, is something I won't expect that same kind of push that we've been having about for the past, well, kind of since the pandemic started, where we tend to get those quick bounces. I think that may be slowing down from now on. But either way, what we do is start off on a clean daily chart as always, so we can see where are the gaps, because we tend to look for gap fills as a good area to use as price targets, because very obvious gaps tend to have big levels of price movements when they come into that. So 508 is going to be that first key one, because that's where it gapped down from on Thursday night to Friday morning. We do also have one here which I do like the look of, that 5, 6, 7. Really, they're only the two ones we're going to be looking at. There may be some smaller gaps within here, but again, like I always say, if you watch previous videos, is we only like using the very obvious gaps, because then whether you're looking for gaps or not, you tend to see them. For example, here you'll see this one's very obvious gap, and that's the one that tend to have the price change when it comes into that. Whereas smaller gaps like this one, for example, yes, it's a gap, but doesn't really tend to have that same reaction. That's why we like to have very clear and obvious gaps. Now let's go into the standard deviation charts. We can start seeing where are our buy zones, profit targets, and all of that stuff. So off the bat, you can actually see, and it's very, very unlikely to see, especially on blue chip stocks, and that's for a stock to be outside of the third deviation. Right now we are seeing a bit more common. I think Starbucks is there, Micron was there, it's now pulled back within the third deviation, but I think it's just because the overall market's selling off, it's pushing stocks further down than they usually would. But either way, when stocks are outside the third deviations, we are still very long bias on them, just because we still expect it to reverse at statistical mean. It may mean that they don't happen as quick as usual, but either way, we still expect it to go and return within the at least a three deviation. So if it's ever outside, it's usually a very no-brainer to kind of trade it. So really, obviously right now we're at around $400 when market closed, and we are expecting, no matter what, for it to kind of push at least back to that 450, and it's something we would expect to happen relatively quickly. I would expect it to kind of happen within the next week, so it's definitely something we're going to be looking to trade long. And then once we kind of push back into that 450, we will then be back within the standard deviation range, which is what we like to see. And it would be more unlikely for it to kind of continue down. It would be quite surprising to see. So we would kind of expect it to kind of stay above that 450, at least kind of 425 area. Then where are kind of our targets? If we're getting long now, for example, what kind of targets are we looking at? In 450, probably an area where you want to at least move your stop. We may not lock in profits at that level. And then we'll be looking to lock in profits much closer to kind of the second deviation, where we'll be looking to lock in that first set of profit. Reason for that is you've got the 503 deviation, you've got the 515 deviation, and then you've also got the 508 gap fill. So this is an area where we'll definitely be locking in at least some profit, and again moving our stop if we haven't already. Then again, we won't lock it all in there, we'll hold it that bit further. And again, this will be going into the first deviation, which will be 558, 567 and 575. Now why are these price targets? First deviation for those two levels, and then the gap fill at 557 or 567, sorry. So this, usually we look to hold all the way to statistical mean. This is one of the rare cases where I'm probably going to be getting out of the trade completely at this level. Now why do I say that? Firstly, because there is some sort of reason for the stock to be trading lower than it was before, and the overall market is weaker than it was just a few weeks or even months ago. So we're not trying to kind of push our limits and try and push back to that statistical mean at around 615, because I mean that added extra or that added upside, I mean we can check it real quick now. If we're looking in profit, say at 558, I mean that's 41% upside. Yes, it would be an extra 15%, but the added risk may not really justify that. So it's probably something we're not going to be looking to. But if you do want to, 615 will kind of be that absolute final target. But for me, kind of this first deviation will be kind of our final target. So the 558 all the way kind of to 575. Now one thing, obviously do be cautious, because you have seen like the overall NASDAQ, the overall S&P 500 has been selling off so heavy, and it's very unfamiliar to kind of see these indexes kind of down at the second or third deviation. They tend to always bounce at the first. When you see this, you know, okay, market is selling off quite heavy, be cautious. So that is just one thing to take into mind when trading any stocks, but this doesn't include Netflix. And it could mean maybe you want to wait for some kind of confirmation or add size with confirmation. Now, what would we consider confirmation on something like Netflix? Well, firstly, we could consider the close and hold above the third deviation, so kind of above 450. Wait for it to kind of break above, come back, retest, and kind of hold that level. That could be one way of confirmation. Second way could be waiting for some sort of a divergence to form on either the 4-hour and or daily, and that could give you some added kind of confidence on the trade. But either way, I mean, you should have your own sort of strategy. These are just price targets that we give out in these videos. But apart from that, that's really kind of it for the breakdown on Netflix. I hope you enjoyed the video. Hope you see you in the next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay.